Hey, this is Matt from InvestiQuant. Today is Wednesday, December 29, 2021. Yesterday, the markets consolidated up at all-time highs. So the S&P opened up higher yesterday, tested up just shy of that round number at 4,800 before rolling over, testing down, and then bouncing into the close. We ended up with a red candlestick, so it closed below the open on more of a consolidation-like day, and this is taking place after the recent rally that we've seen up here to all-time high territory. It's been followed up in the overnight session by a quiet range. We're trading down just a little bit, but still within the prior day range as of the time of this recording. So we're going to be looking at that pattern here in Discover. I'm going to grab all four instruments, and this will be applicable, assuming the opening location is where we open at. This would be applicable for the S&P and the Dow. The NASDAQ and the Russell do not qualify for this pattern today. But let me go ahead and set it up anyway. I've got all four instruments selected. The trade type is set up as a long at 9:30 a.m. Eastern Time that exits at 4:15 p.m. Eastern Time. Now, currently, we are trading down within the prior day range, so I'm going to add both of those. So I've clicked on Gap Down. I'm also going to click on Open in Prior Day Range. So this needs to open above yesterday's low, but below yesterday's closing price. That's what Gap Down and Prior Day Range would refer to. So I've got both of those selected. Next, I'm going to go into the Price Patterns library, and I'm going to add two pieces of information from here. And that information is going to be that yesterday closed below its opening print, which means it had a red daily candlestick. I just grabbed that from the active today. I'm also going to grab this day after 52-week high close. That means that yesterday closed at the highest closing price of the year, and a little bit more since we've got a couple days left here in the year. All right, now I can click View Results. All right, here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern Time and exiting at 4:15 p.m. Eastern Time when the prior day closed at a 52-week high but below its opening print. This is followed up by a gap down within the prior day range. Historically, we've got 26 samples here in the S&P. The NASDAQ has 29. There's 21 in the Dow and 12 in the Russell. The win rates on these are very similar in the S&P and the Dow, and these are the only two markets that have this pattern potentially in play, depending on where we open at this morning. They are both coming in at around 62% of these have closed above the open for the day. For the NASDAQ, it's 45%, and for the Russell, it's 42%. So we've got two that are coming in favored and two that are coming in a little bit weak there on win rates. If we look at the average moves, looks like the S&P has a larger average move to the upside. The NASDAQ has had larger average moves to the downside. That is also the case for the Dow. And then the Russell, larger average moves to the upside. So very mixed on the average moves. When we look at the win rates, though, the two instruments that this is potentially in play for today have been favored to the long side. So you'd still need to make sure that we do gap down within the prior day range. And this pattern is interesting in the fact that the opening location really does matter. So if we don't gap down in the prior day range, this would not have the same tendency historically. That's something you can dive into on your own if you've got the platform. So hopefully you found that helpful. Good luck today, and we will see you next time.